Hello everyone. Did you know Uber stock jumped a staggering 128% in the last 1 year? If you look at the price chart here, Uber stock was trading at around 32 or $30 and it jumped all the way to $61.62 as on December 13th. That's a price increase of $34.64, which is quite massive, or 128% increase just in the past 1 year. Do you know why Uber stock jumped 128% in the past 1 year? And should we buy more at the current price of 62? Let's take a look how Uber has been trending in the past 1 year, and should we buy more? Firstly, Uber's monthly active platform users have been consistently increasing, all the way from 124 million in Q3 of 2022 to 142 million in Q3 of 2023. And its trips has also been increasing quite significantly. Its trips was at 1.9 billion in Q3 of 2022, and it jumped all the way to 2.4 billion in Q3 of 2023. What's important here to note is the average monthly trips per monthly active user has been consistently increasing. It grew from 5.3 to 5.7. which is a strong indication that Uber is getting a lot of repeat customers who are using their platform more frequently, which is very positive for a company like Uber, because they don't have to spend any additional advertising money to acquire extra trips. It's the same customer that is driving additional trips, and this would in the long run generate a lot more revenues at a lower cost for Uber, which we will look at in the following slides. Uber also has strong gross booking. Gross booking is the total amount of money generated from booking that the customer ends up paying. So in Q3 of 2022, Uber's gross booking stood at 29.2 billion, and it jumped all the way to 35.2 billion. So that's a steep increase of 21%. And from the gross booking comes Uber's revenue, which is a portion that Uber gets to keep after paying the Uber drivers. So in Q3 of 2022, Uber's revenues was 8.3 billion, and it jumped all the way to 9.2, close to 9.3 billion in Q3 of 2023. So that's a 11% growth. And all these quarters, Uber has had significant double-digit growth across its bookings as well as its revenue. So let's take a look what specifically changed in Q2 and Q3 of 2023, which caused a significant increase in its stock price. Uber generated positive operating margin for the first time in Q2 of 2023, and it continued to generate positive margin in Q3 of 2023. If you can look at the slide, Uber was running at a negative operating margin. Operating margin refers to the difference between total revenue and the operating expenses. So this was the first time where Uber was not losing money, especially from Q2 of 2023 to Q3 of 2023, where they generated a positive operating margin, which means their revenue exceeded their cost, which was one of the major turnaround in Uber's history, where all through these years they were burning cash, and now for the first time they're generating cash, which is a very positive for a growth company where it's starting to see cash flow positive in their income statements. Now let's turn around and look at an important concept called as operating leverage, which Uber was able to achieve in Q3 of 2023 and in the first 9 months of 2023. Now, what exactly is operating leverage? It refers to growing sales while keeping the fixed cost the same, hence growing operating income. To give you an example, let's take a look at Uber's income statement, and let's take a look at especially the data for the first 9 months ending September 30. So if you look at this chart here, Uber's revenue increased in 2023 by 18%, whereas if you look at its sales and marketing, it decreased by 6%. And then similarly on its general and administrative cost, it decreased by another negative 13%. So what this tells you is Uber is able to increase its top line. At the same time, it is able to decrease its cost, and as a result, it's able to generate a positive income or positive cash flow in their profit and loss statement. So if you look at it, Uber's total costs only increased by 8%, whereas its top line increased by 18%, which means with a lesser increase in cost, it was able to generate way more revenues, which in turn resulted in having a positive income of 458 million in its operating margin line, right, or income from operations. Whereas if you look at the prior year, Uber lost 1.69 billion, whereas in 2023 Uber was able to generate 458 million. So that's a difference or an increase of 2.18 billion in the last 9 months, which is quite staggering. And Uber stock reflected the significant turnaround in its income statement, where the company generated quite a good cash flow. And again, Uber is entering into a new state of operating leverage, where it's able to increase its top line while its costs, especially sales and marketing and administrative cost, it has been lowered. Now, at a stock price of Uber is currently selling at a stock price of 62 as on December 13, and at this stock price, its PE stands at a whopping 182, which is quite staggering. And the way we calculate here at 182 is looking at the earnings per stock of 0.23 for the last 9 months, and prorating for 12 months, we get to an earnings forecast of 34 cents. And then we calculate the PE by dividing the stock price by the earnings per stock, which gets you to 182. Now, PE, those who don't know, is an important concept when it comes to trading stocks. PE refers to the price per stock divided by earnings per stock. What it means, what it tells you is for how much price a buyer is required to pay per stock for every dollar earned by that stock, right? So it's the amount of money that is required to pay per stock for every dollar earned by that stock. So what it means here, a PE of 182 means is the buyer is required to pay $182 to get $1 in earning from Uber stock, which is quite staggering. And just to give you a context, the top 500 companies in terms of valuation in US, they are trading at a price to earning ratio of 25. So just to give you a benchmark, 25 is the current PE ratio for majority of the top 500 US companies in terms of valuation. And some of the growth stocks have higher valuation, around 35 to 40. Whereas Uber has reached a PE ratio of 182, which is quite staggering. So, is Uber stock overvalued at the current price of 62? We think yes. And if Uber continues at the current trajectory of growing its revenues at 18% and its cost at 8%, and gaining a very good operating leverage, and also let's just say everything else being equal here, Uber's earnings forecast for 2024 would be $1.76, which would mean if I'm a buyer and if I want to pay a PE ratio of 25, the average stock I should be willing to pay would be around $44 at a PE ratio of 25, and assuming Uber is going to hit an earnings per stock, earnings per share of around $1.76. Given that Uber is a growth stock, and let's just say we want to pay a premium price for its growth, and let's just say we want to pay a PE of 35, the average stock I would be willing to pay would be $62, right? And Uber also mentioned they're entering into the advertisement space, where a customer who's waiting for delivery or for pickup of their groceries, the grocery companies or restaurants can send advertisements via Uber app to those customers, which in turn can generate a nice advertisement revenue for Uber, which is an additional source of income with minimal cost. And if Uber generates an additional $500 million to $1 billion in advertisement revenue, which is what they're projecting, its revised earnings per share in 2024 could be anywhere between $2.09 to $2.42. And again, at a PE of 25, an investor should be willing to pay anywhere between 52 to 60, and if they want to pay a premium at 35, an investor should be willing to pay anywhere between $73 to $85. So, having looked at the different scenario, the price range that an investor or I would be willing to pay would be starting at 44 to 85. But we also want to have a margin of safety. We don't want to pay assuming everything will go well, assuming everything will go well with Uber in terms of their earnings forecast. So we definitely want to pay, we definitely want to get a bargain price so that there is some margin of safety with regards to its stock price. So having said that, at the current price of 62, it appears there is no margin of safety, and hence the recommendation is to hold off buying Uber stock at this time. A price of 35 to 45 provides a good margin of safety, so that when the stock earns, when the earnings per stock reaches around $2 or more, and if there are investors who are willing to pay a premium PE ratio of 35, you get to a price point of around 75 to 80. Which would mean if somebody who pays $35 would get a nice increment in their earnings. Just a disclaimer, I don't hold any Uber stocks. I bought it in March when it was around 32 and sold in December 23 when it crossed $60, because I just felt that it's getting into it's getting into territory where it is overvalued. So I would wait for an opportunity to acquire again if it drops down below 45, or even for that matter in and around the $35 range. So please leave a message and let me know what you think about Uber stock. And if you have any comments on this presentation, feel free to drop a message. Thank you.